Afternoon, everybody. Derek is out this afternoon speaking at the Market Mind Summit event in Las Vegas. If you're in Vegas, around Vegas, or can get to Vegas, feel like going to Vegas, go check him out. He is a keynote speaker there. So, I'm doing the meeting today. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is a registered SEC broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video and read this disclosure in full. Positions disclosure. I had a few things on earlier this week, but trimmed down. As most of us know, market had a rough week this week, so let's do a little reviewing. So, day 2 down today for SPY. So this all really started last Friday. If you guys remember, we had options expiration, which was pretty hyped for selling coming into it and selling after it. Usually it's not quite just exactly, okay, it's options expiration day, let's, we're expecting selling, everyone sell and everything like that. That's kind of how it worked out, and then Powell really hit the nail into the coffin yesterday, if you will, with his FOMC meeting where he came in, paused, quote unquote pause, whatever that means. People like to say that word when we don't hike. But basically not hiking interest rates, but delivering a more hawkish message, hawkish tone to his press conference at 2:30 after the FOMC came out yesterday. And he basically, the headlines were that he left the door open for another rate hike coming by the end of the year, either at the November or December meeting, which I believe the November meeting is November 1st. So it's technically a November meeting, but it's right away in November, a little more than a month out or so. And then there's one more meeting in December. And he more or less pushed back the thoughts of rate cuts coming at least early in 2024, basically. Kind of the same that we've been hearing, although he seemed to have backed off in the last couple meetings, but higher for longer, really emphasizing that. Still fighting inflation, don't want to make the mistake of easing too early and having inflation kick back up too early as well, because that will probably lead to worse events down the road and just more potential long-term damage for everyone. So yesterday we sold off really hard on that. Just looking intraday yesterday, you can see, did we even downtick right at 2? Yeah, I guess we did. We downticked right at 2. First move, a false move is the phrase that people like to say. I don't really like to say that. I just think that the 2 o'clock doesn't really matter that much, especially when you get what you expect. So we ticked down, we negated that, and then Powell came on, and it was pretty much all selling from there again, just because of everything I just went over. Definitely leaving the door open for another hike, still fighting inflation, higher for longer, rate cuts pushing back until at least like the second half of the year, next year in 2024, so on. So heavy selling yesterday, we closed on lows, big gap down this morning, and more or less the same thing today, a lot of selling. We had a little bit of a midday well, I guess we had a morning pop, then we had a little bit of like a midday, hard to call that. It felt like a rally during the day. Now looking back in hindsight, more just kind of like a lazy pop there. So, and then more selling into the close, which this is ugly and this is brutal, but I think it does kind of make sense. Just we've gone from a lot of fear in sentiment, a lot of poor sentiment, to when we were coming into these highs. If you guys remember, this is when like that CNN fear greed was on extreme greed. It was stuck, I think it was the entire month of July. This like whole month of July, we were stuck on extreme greed. It really just seemed to come to the point where we had got into this kind of Goldilocks environment where we weren't coming down. We had no reason to come down really. but the picture was kind of being painted picture perfect. So we had this August shakeout, and now a hawkish Fed in this hyped up environment where, again, positioning really isn't that low. It's not like we have full positioning or anything, but this is not the bottom of the bear market where it's all sentiment and there's zero positioning. There's definitely positioning out there from vol funds and stuff like that to sell. It's been a while. I know Bill said it, our first minus 1.5% day in a while, which as of right now, S&P SPY is minus 1.7%. And it's been a while since we've had that. I remember even these red days back here, they felt really bad, and percentage-wise, it wasn't really that bad. I remember even this huge red day here. I feel like we were barely even getting down 1%, maybe on this day, and then this gap down, maybe close to 1% or something like that. But it's been a while since we've had this real minus 1.5% plus day or so. And that leaves us with a VIX that is, let me see if I can get this. A VIX that is possibly getting ready to break out / breaking out today. So the VIX had found a base off of 13 for quite a while. This VIX really has been finding support on 13 pretty much the whole summer. But it just couldn't really break out at all. We haven't seen 20 on the VIX. We haven't seen a 20 handle since the spring back in May or so. But we would hit 13, bounce towards 15-ish, 16, 17 or so. Then in the so this was July when we were just stuck here, and we kept trying, and that's what happens when you get that Goldilocks kind of environment. The VIX just kind of gets floored out. It's not really shooting down or anything like that, but you're not getting any uptick, so you're not getting any volatility. Day trading can be kind of hard in that environment. We have the August shakeabout, come back down, we floor out at 13 again. Throughout the month of August, we floor out at 13, but can't really get through 15. And then finally, as of yesterday, the past 2 days actually, we poked above 15, but couldn't really close above there. Yesterday got our close above, and today broke higher. So VIX trading highest levels we've seen, again, since that August pullback, so new highs for the month of September. And then if we get over, we got this 18 level here for some resistance, with the August high being 19. And then if the VIX gets over 19, which is looking possible here, we got 20 as the next level of resistance. And again, that's going back to really the spring. It'll be new highs for the VIX, highs that we haven't seen all summer long. And as we know, it's been a pretty good summer since that spring breakout of 4,200 back in May or March or so. And then taking a look at the VVIX as well, which has been more or less fully subdued. VVIX had a nice day yesterday, closed really well, gapped up today. Looks like it made a tail down at one point. That was our afternoon rally. So today, this afternoon, we did get a little bit of a rally from the market with the VVIX. And I don't think the VIX had made a new high at that point. So VIX hadn't made a new high, rolled over a little bit with the market rally, and that's when you saw SPY rally a little bit this afternoon. VVIX had actually come down and made new lows, but came down and made new lows, based out, wedged out, broke that wedge up, rallied and made new highs at the end of the day, and pretty much closed at highs, which a VVIX closing at highs is usually not a good sign for the next day. It doesn't mean that it's going to be an all that day, but at least for a gap down, at least for a little bit of morning selling, even just looking back at the history of this, you usually, when you have a strong VVIX day, usually, even if you sell the next day, you're at least gapping up a bit, or you're usually at least gapping up a bit. So going back to SPY and the markets, we'll just take a look at all of our indices real quick. SPY, again, ugly day 2 down. Qs, also day 2 down. Qs are not quite breaking this August pivot yet, though. IWM well below that August pivot. Very, very ugly. IWM has been the ugliest this past week too. It's like a day 4, day 5 down now. And then the Dow also breaking that August pivot, looking more like the SPY here. So then where that leaves us tomorrow, yeah, I guess like 2 points I want to make. So the first point is we're definitely setting up for an extreme extension bounce, and hopefully that could be tomorrow. But the bigger point is that as of today, we're entering a weekly downtrend, which is a little bit nerve-wracking, but in this market, we got to take it day by day. So first, the daily. So it's been a constant, pretty solid setup, honestly. Calling it a setup is a little bit of a stretch, but when we get $10 extension in SPY and in the QQQs, $10 plus, that's extreme extension. You can usually start to look in the other direction for those counter trend, either bounces, in this case it's going to be a bounce, and when it's on the upside, it's a pullback. But $10 extension, which as of the gap down this morning, it was a pretty ugly gap down. We definitely were not there, but as of right now, we are entering $10 of extension for 41 is our SPY daily ADMA, and here we are at 431. And I remember even back in this, we were talking about this afternoon, even back in this August pivot, we didn't even quite get $10 extended. SPY got down to, I think 433 was the low, and the ADMA at that time was like 441-ish. So it was like $8-9-ish extended. So $10 extended. Let's take a look at the Qs real quick. Qs 368, 367, 357. Qs also getting $10 extended. So we're setting up for an extension bounce. After today, coming into tomorrow morning, this daily ADMA is not going to be 441. It's going to be lower, because this is adjusting after this candle. Tomorrow there will be a new candle. This candle will be going into the weight of this moving average. I'm guessing this is going to be down at like, what's it at now? 441, 431. I'm guessing it's going to be 1.5 to 2 points lower. So like 439-ish, maybe mid 439s. I'm guessing it's going to be down around like 439-ish tomorrow, which means tomorrow morning, SPY 429-ish, SPY 428 is going to be that $10 of extreme extension. So for tomorrow, let's hope for a big gap down, and if it's big enough, then we can maybe look to do some pre-market buying or look for those like quick morning opening drive bounces. Basically the scenario is going to be, again, extreme extension. Look for a bounce to come soon. If we gap down big, probably can look for the start of a rally pre-market. If we don't gap down too big, can maybe still look for that, but you definitely have to be careful, because if we're gapping down like $1 and SPY's ADMA on the dailies down 2 points, and that means we're only extended downside 8 to 9 points or so. $10 isn't like a magic number. Again, that's why I say I struggle to call it even like a setup, because it's not, oh, SPY is $10, let's turn around. SPY can get 12 extended, it can get 14 extended, it can get 16 extended. I mean, it can get 20 extended. I don't think we're quite in that type of environment right now yet. But this thing could definitely get 12, 13 points extended. But once you get 10 plus, that's when it's like usually a good time to start looking the other way. So ideally tomorrow, we're below today's open. 428 is pretty decent, and then 426, you start to enter some support from back here. And then below 426, below 425, that's when you start to get into like the real big support of 4200, which was the spring breakout that we had back in March, where we made this higher low, we came up, we wedged out, we had a couple false breaks. It took a while, but we finally had that huge breakout, which was more or less SPY 420. I don't think we dive right down to 420 without some type of bounce. I would not be surprised to see a bounce somewhere between 425 and 430, somewhere in this zone. I think we can find a little bit of a bounce support. So that's for tomorrow. Now the tricky thing is, again, for the first time since, and this is just something to be aware of, for the first time since our breakout back in the spring, we are technically getting into a weekly downtrend. We have a weekly high, a weekly low, a weekly lower high, and now we have a weekly lower low. And I remember this tightening pattern. We had the bear market of 2022, whatever you want to call it, lower highs, lower lows, lower highs, lower lows. Then we had kind of like a tightening pattern of lower highs and higher lows. Then we had a higher high. Then we had a higher low. Then we needed a higher high to get into an uptrend. That higher high came in the spring breakout of 4,200. That established our weekly uptrend. And it was pretty much a picture perfect weekly uptrend. And now that is broken. And this is possibly, it kind of broke back here. We had two, should have been a little bit better about calling this out this week too, but we did have two inside weeks coming from last week. So the past 2 weeks, our SPY were two inside weeks, both sell red candles. So looking at this, I mean, again, you know, we're entering a possible weekly downtrend, but we're entering it into not too far off of this big support area. It's unlikely that we just dive right through this in a really easy way. I would assume 420 is going to be some decent support. If we see it, which we might not even see it, we might be able to find some type of bottom tomorrow, 428-ish or so, and we'll see what that looks like from there. But there's definitely something to be aware of. It's killing bigger picture momentum that we've had since the spring. Which it is what it is, it happens, but that's just the market environment we're in, and we're still in this bigger picture cycle where we're pretty much done raising rates. Maybe we have one more rate hike, but then we get into the holding rates and the higher for longer scenario. And something I've always been talking about is, historically speaking, if you look at the history of the Fed funds charts, usually when the Fed starts cutting rates is usually when things are actually getting pretty bad, and that's when the market's like really selling off. So I'm not saying that this is the start of that or anything, but just some things to be aware of. So weekly picture, starting to enter a weekly downtrend. Be aware of that, and that just means, I think, that now that we do some, be careful of doing like portfolio buying. We were doing a bit of portfolio style trading throughout the summer or so, and now you might have to, now this might be more tactical trading, where you're not just like building out a portfolio and riding, but you load up, you take off, maybe even get flat, maybe flip some short, just kind of like tactical back and forth trading. So weekly looking ugly. Daily, though, is getting a bit extreme to the downside. I think we can look for a bounce pretty soon, whether it's right here and we gap up tomorrow, or if it's 428 or 426 tomorrow. I'm not entirely sure. If we see SPY 426 tomorrow, though, I will definitely be buying some stock for a bounce. Trying to think what else. I think that's it, really. I mean, overall, it's an ugly day. We had like a few rallies intraday. This Apple ended up being okay, but that rolled over. Netflix was pretty solid in the morning, which Netflix, I think, was either green pre-market or almost green pre-market. That also rolled over. A couple of you guys spotted some Tesla strength, which that was decent on this little breakup, but also ended up rolling over. Some of you guys also saw Meta relative strength. This was holding up when the market was a lot heavier. That ended up being okay, but also ended up rolling over. Some momentum shorts out there as well. But yeah, I think that's all I really got. Tomorrow definitely might be exciting. Um, Not that these past 2 days haven't been exciting, but these past 2 days have been like a little bit nerve-wracking. Whereas tomorrow, although we'll still be down, I'll be more excited and have a little bit more conviction on one side of the trade, if that makes sense. Take a look at TLT real quick. TLT, another sign to hear that this probably isn't done yet. VIX closing well, VVIX closing well, TLT closing absolutely terribly. I mean, this that's really bad. I mean, the CLT is down to the point where we bottomed back in October for equity markets, which is far, far lower. LQD is far away from that still, so is HYG, JNK. But yeah, keep an eye on this TLT. Huge volume today. Looks like a lot of it was at the close. Huge volume there today. And then the dollar. Hard to say there. Hard to say. So yeah, it's ugly out there. It's looking ugly. It's looking like it's going to get worse. But for the immediate 1 to 2 to 3 day future, I would not probably add new shorts here. I'd get ready for a tactical bounce buy where, like, if SPY's trading, say, 426 tomorrow, I'll be looking for like a 430 retest or something like that. I'm not buying 426 to sell 460 or something like that, but you get to that point where, okay, we're $10, $12 extended, SPY is down $10 straight, the next 2-3 points are probably up and not down, and if they are down, then the next 2-3 points are even more likely up, not down. And yeah, I think that's all I really have to talk about today. So happy to take a look at any questions, concerns, comments, or complaints that any of you guys have. So let me scroll up in the VTF, see if I missed anything. Dead lows, closing on dead lows. 2 days in a row too is pretty brutal on big days like that. Pills on an old iPad. The Gamma profile from this morning. It's like 4,400, pretty thick. What do we trade down to on futures today? $43.67, which I guess we actually didn't quite break the August pivot on futures. Maybe, I guess SPY's a little messed up because of dividends. Futures didn't quite break the August pivot yet today. Very, very close to doing it. But I guess technically not quite yet. Anyway, scrolling down. Second one makes assumptions on today's transactions, not as accurate as the morning one will be. Interesting. I'm sure Gamma's definitely super negative at this point. Wish 430 wall holds. I mean, the worst thing that we get tomorrow is a flattish gap and a flattish day. And that just ruins the extension idea. And we still have like an ugly, bigger picture weekly chart scenario going on. So yeah, I'm hoping for a gap down under 430 tomorrow. What do I think about the consumer sectors? Target, Nike, Starbucks. I'm sure a lot of them are pretty mixed at this point. Target is ugly. Wow. I mean, I doubt Target's going bankrupt. Bigger picture, probably a good area to nibble some. Um, that's super ugly though. That's super ugly. I don't have too much good to say about that. Nike, same idea. I doubt Nike's going under. Probably a good area to be nibbling some bigger picture. If Nike's down tomorrow, this could be one to look at for a bounce. Target, I think, there's just so much drama in this name. It's not even that extended, really, after the past couple days. But this Nike is definitely getting pretty extended here. Nike, if it's like, especially under 90 would be nice. But if not, maybe into 90 tomorrow. You could look for a bounce on that. Starbucks. Oh, I'm wrecked today. Starbucks has a lot of drama going on in this name too. 90 is a pretty big level in Starbucks. It's like 92 to 90 is a decent support zone. Take a look at like staples in general real quick. I know these have been getting hit over the head. It's through that big pivot there. 70 a big level for staples. I saw Coke had a short report come out on it today, which is interesting. I didn't read what it actually said. Coke pretty ugly, Pep ugly. Staples are probably a buy soon. It's probably more of like a bigger picture idea though. And if the economy really is starting to turn, you could see XLP back down at like 67, 65 or so. So they look dicey, Eddie, I think. I think the best one for coming up in the near term is probably Nike on further downside. This could definitely be under 90, but if it's under 90, like literally tomorrow or the next day, you can probably look for a bounce on that. Yeah, good question, Dave. Asking me about Fed cuts. If you just, and every time is different, for sure. But if you just look like throughout history, usually it's not that the Fed like gets it wrong. It's just they have a hard job of balancing things out, and I feel as though typically they are just a little bit late on everything. They like to look for confirmation and look for extra confirmation. By the time they're getting that extra confirmation, the tide's already turning the other way. So, like, I remember in 2018 in December, that was like the Powell pivot bottom way back here. Where was that? Way back here. When in November, I think it was November, we had like the one last rate hike, which we're coming up on November again, so maybe we get something like that. But I'm pretty sure it was that November we had like the final hike, and market conditions were already getting tight, things were already dwindling away, and the market really sold off hard in December. We sold off like every single day that December, until finally the Powell pivot came in, and Powell pivoted his stance, his policy at, I guess it was like the December meeting. Maybe it was even after the December meeting, but we ended up bottoming on Christmas. And then if you look at like 08, 09, I forget exactly when we started cutting rates, but by the time they started to do it, it was already too late. Markets were already selling off a bit. So and then I'm sure you can look at other examples in the past. So it's all like, I agree with you on the front running, but if anything, the market sometimes will also say like enough is enough, and the Fed is saying let's be hawkish and maybe hike more. And if the market is about to go down and say no, enough is enough, then they're gonna sell off hard until the Fed actually like really does ease up, and then you'll start to see the market bottom in like a bigger way. So it's just a good like case study, looking at history and looking back at how these markets trade with the Fed in anticipation of the Fed moves and everything like that. But the Fed's not hinting at all at rate cuts, and this market's starting to look pretty ugly again. But it's one down day, 2 down days on the S&P is not going to be enough to convince the Fed to take their foot off the gas. It's going to take some real damage, which we haven't seen yet, really. So we'll see. And again, definitely not every time is the same. But yeah, usually. And two, like, I remember back in the summer, or like earlier this summer, when markets were at highs and the Fed was, not the Fed, but the Fed futures, we were pricing in a possible rate cut at one point this spring for this September meeting. Like, we were already possibly pricing in cuts, and the market was at highs. And we're like, I don't know what these Fed futures are thinking, but why would the Fed cut rates when markets at highs of the year, the Nasdaq's like, Apple and Nvidia are basically making new all-time highs. Like, why? That would ruin the inflation fight that they're doing if they ease money to that point. So that's kind of like the opposite, where the markets were not expecting cuts, even though the Fed futures were. The actual market wasn't, and now we'll see over the next month or so how things change. It could be an ugly October, but if the market sells off hard, that's going to be a signal that it's time for the Fed to actually take their foot off the gas in like a real way, not just talk, not just all the talk. So yeah, I hope that kind of makes sense, Dave. It's definitely not a black and white formula or anything like that, but I've just noticed that looking at Fed funds futures charts, and people like to think that we would just sell off hard when we hike rates, but sometimes it's actually not quite like that. We actually hold up okay when we're hiking rates, and then we hold rates, and then markets start to sell off in anticipation or just while things get bad, and then Fed starts to cut rates, but by the time they start to cut rates, it's usually too late and they've held too long. So yeah, we'll see. Should be interesting. Starbucks outside month. Starbucks is like a good like IRA name, one of those. Not really something I trade much, but I mean, Starbucks is a beast. People will wait in that line for that $5 coffee, $7 coffee every day. Nike earnings probably is coming up. I'm not exactly sure when, but usually they're one of the first names. It's probably like early October, I would guess. Maybe it's next week though. I can name you a few places, Will. Also, this time there's the interest rate and the size of the balance sheet. Size of the balance sheet reduction is draining liquidity. I'm like, yeah, that's a good point too. The balance sheet, I always remember too the 2018 example with the balance sheet. We bottomed on Christmas 2018 pretty much with the Powell pivot, and then I remember this was like one of the first true V bottoms in history, and ever since then we seem to more or less only V bottom. But I remember that February, March, April, May, that spring, trying to get short at a few points and trying to make the argument that while the Fed had stopped hiking and all that and had like truly actually taken their foot off the gas, they were still taking the balance sheet down, and that didn't really seem to matter. Maybe this time's different. Maybe that weighs on us a bit more. But if the Fed starts to really ease up and possibly even talk about cutting or anything like that, again, not to like not pay attention to the balance sheet, because I definitely do. But I just remember times in the past where that it was coming off and it didn't really affect the market all that much. It might have slowed things down a little bit on the upside, but it wasn't as bearish as you'd think. What do I think about the possibility that the Fed never really raised enough? I recall 6 months ago when Derek was talking about wanting to kill consumer demand. It never really happened. True that. Part of me just thinks it's just, I don't know, that's just like how we think as traders. We want instant gratification. And these things take a long time. That COVID boom was real. It takes a long time for people to start running out of money and shifting their spending habits and stuff like that. But let me just finish reading your question. So I saw an article today. I'll try and find it after this meeting. I think it was a Wall Street Journal article, and the title was something along the lines of instead of higher for longer, it was like higher forever. Meaning, and I could see that too, and I don't mean forever, but I really don't get why the Fed futures have been so quick to try to anticipate rate cuts coming. I really don't get the point of a rate hike if you're going to cut and eliminate that rate hike 2, 3, 4 months later. It doesn't really make sense. So I don't know why the futures are pointing to that. So maybe I'll try to find that article later. But yeah, I mean, rates aren't sky high. This isn't like extreme highs or anything. It's just levels that we haven't been used to in a long time. And maybe people want rates to be cut down because that makes money flow easier. It's easier to get money when rates are lower and everything. But yeah, so I don't want to say that they haven't raised enough. I just don't think it's been long enough. I just don't think it's been long enough. Give it another, like, let's see where we are next summer. I have a feeling we're not going to be booming the way we were this summer. Even if that means we're not necessarily doing poorly or anything like that. But yeah, I think that's the way I would say it. It's not that they didn't raise long enough. It hasn't been long enough for time. And they've been saying that. They've been trying to say, we're watching the data. Amazon just broke 129. We're still selling off after hours here and some of this stuff. SPY's still selling off. TLT's still selling off. TLT is almost below 90. But yeah, I just don't think it's been long enough. 2024 election, that is gonna be. Let's just not even think about that right now. Next question. What do I think of PayPal? Seems to be right around the support zone. Does PayPal have support? Might not. Honestly, Eddie, it's PayPal kind of reminds me of like a Snap. It's kind of dead money right now. For super big picture stuff, well, you see the huge run and then it comes down and it just can't really get off the floor. I guess, what is this level, like 58 or so? I guess you got the 58 level to play with. Other than that, I don't know, it could be big picture stuff, but you could buy some here, and then I would probably buy some more around like 52, and then I would buy some more around like 46. But that's like bigger picture, dollar cost averaging in. For right now, I have nothing good to say about this. This was actually a decent trade we had back here. I remembered not holding for quite this whole move, but definitely made some money off that. And then they just got wrecked again. So, I don't know, looks pretty bad, Eddie. I don't want to tell you to short it at this point, because it's so beaten up, and it's still a real name, but the technicals usually don't lie, and this should not be back down here. So I would probably wait, Eddie. You might be able to get that under 50 eventually, and if you don't, it'll probably form like a nice long base over 50 for you to start playing with the base. Who am I voting for? Kanye. Thoughts on a potential shutdown? I do not see that happening. Really, thoughts on that? I don't see it happening. If it does, we'll probably have some riots across cities. So I don't think that's happening. I don't think people are going for that again. Bill finding the article for me. Higher rates, not just for longer, but maybe forever. Looks like that's mostly everything. Let me just check the YouTube. Highest 10-year, a couple comments on the YouTube. Highest 10-year yield in 16 years. Yep. I've said this before. There's a lot of people managing money, including myself, which I'm no like money manager or anything. I'm just some trader. But a lot of people out there that have never had a professional career with interest rates where they are. It's been a long time since they've been this high. So there's some adjusting and some learning that people still have to do, I would think. Never had so many downward revisions in NFP and not had a recession. Yep. Same with the length. Yep. And you could argue, I mean, that's like the argument I've been making with the Fed funds futures, that the fact that we're still kind of hiking and we're only just starting to get to the holding phase. You could really argue that we're still in the first half of this bigger cycle. I don't want to call it correction, I'd more call it like a cycle, if you will. Like a big, 10, 20-year business cycle. And then to add, you're saying there's about a 15-month lag in the effects of monetary tightening. Based on that, things might get really ugly in December. Makes sense. Makes sense to me. And Homan wants S&P to the 200-day. You might get it. This chart is looking dangerous for sure. I'm checking the VTF one more time. Eddie's sneaking in the last question. That's quite alright. My opinion on FTX report: you don't get the rally today with rev miss, and they only raised a lower forecast next year thanks to cost reduction. Honestly, I didn't read this report well enough to give you a super smart answer, Eddie. I didn't go through it that much just because I knew the market was going to be so inflated today. I didn't really care. You're saying that they, quote unquote, only raise the lower forecast next year, but raising it all, I think, is pretty impressive because there's been a lot of names that have been coming out and doing okay on the numbers, beating EPS and rev, but their guidance hasn't really been great, and that's what's been killing a lot of names this past earnings season. Which this past earnings season was kind of the first one of, I guess, what you could say like a bad earnings season, where names actually were starting to miss on guidance and get punished for that. So cost reduction measures is a good thing. I mean, that's what they should be doing. So just based on what you're saying, I would say that actually kind of makes sense. But let me take a better look at the numbers after the meeting as well. I didn't really read the summary or anything. But I mean, it's a strong name. It was strong up into the report. What does UPS look like? Out of curiosity. Bad, yeah. Yeah. Sounds like it was okay, but I do agree that's pretty impressive for a move off those numbers, especially in this market. I don't know. I'll take a look at it. I'm curious myself. Holman loves puts. Shout out puts. All right. Looks like I got through everything. It's been a tough week. I'm definitely down on the week / even bigger than that at this point. But that's how it goes. Gotta take every day, not with a grain of salt, but you just gotta kind of wipe it off and move on to the next one. Don't let a past mistake block you from a future opportunity. I've definitely done that before. I try not to do that as much now, but just because you lost on something yesterday or you had a bad week doesn't mean that you should see a good trade set up tomorrow and not take it. Do your job. It's your job. You see a good trade set up, the stars align, don't not take it. You should take it. But also don't be stupid and try to go balls to the wall and make all your money back in a day, because you're just going to end up ruining yourself. Check yourself before you wreck yourself. So I think that's it. Have a good night, and we'll see you guys tomorrow morning. Let's hope for a decent gap down to give us some better conviction on a bounce. Have a good night. See you guys tomorrow morning.